Chris Peel is with us around the desk this morning. Chris is Chief Investment Officer at Tavistock Investments. Have we had peak pessimism around the trade war, do you think, at this point? We're sort of grappling with the idea of why Asian markets were stronger this morning on apparently a better tone to the discussions, and yet we still saw a little bit of dollar strength that would suggest there's still a little bit of uncertainty about the outcome. But peak pessimism, what do you think?
I don't know if we've reached peak pessimism, but I think the house view is that we'll get some type of successful collusion between China and the U.S., and we're playing it from the Chinese angle. I think most people that have a view on a successful outcome are long U.S. equities. The Chinese market, the A-share market, it lost over 50% of its value from its peak in 2015. They're very attractive on a valuation basis, but I think the world is still very pessimistic. Part of it's the cloud that follows Trump, but he's called China to task, which isn't necessarily a bad thing in regards to trade. And
so how are you positioned in Chinese equities? Have you got a long?
We're long Chinese equities, domestic Chinese equities, right, relative to our benchmark position. Yeah. And that's based on a long-term or medium to long-term view that China will catch up with the rest of the world, and just that whole tilt east in the portfolio. The Asian economies within themselves are growing significantly above the average in the rest of the world. And Japan being aside from that in the region.
So one of the things that sort of strikes me in the year ahead as well, that there's also the technical backdrop, which is that China will become a much bigger part of many indices as you see them reweight to reflect the size of the marketplace and obviously the economy in China. Do you think that people are holding back from making some of those allocations? Normally you'd see a degree of positioning to reflect reweightings, because one would argue that actually people are taking an active decision to be short of China by having such relatively low weightings. Sort of long, but they're underweight in terms of that long. Do you see that being changed as some of these more optimistic events play out?
Yeah, I think there's many investors are still gun shy because they don't necessarily believe the numbers that come out of China. It's really hard to tell what's real and what's not real. But I view China as a very, very well developed emerging market, and politically it's very strong. Xi and the party have complete control over that economy. So from a standing start where we are today, that market looks very attractive vis-a-vis developed market equities, and also given that it is the second largest economy in the world, it shouldn't be deemed to be an emerging market. It is a huge economy that is still in the early stages of its evolution into a market-based economy.
Chris, thank you so much for that. Christopher Peel with us from Tavistock Investments.